Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Options Trading for Beginners, brought to you by the Options Trading Hero. Let's leap into it. All right, so let's start off by looking at SPY on the 1-year daily chart to get a feel for where the market is and where it may be going in the future. So MACD is still looking like it's wanting to cross and head lower. Stochastics looking really good, crossing above the 70 line, heading down. We've been channeling relatively sideways since April 3rd, and it doesn't look like the bulls have been able to take serious control since then. So my educated guess is that the prevailing trend may continue. So looking at a 1-year daily, we're basically trending sideways, slightly downward. So, which is fine. We can still make money with bear call and bull put spreads, even in a range-bound market. So, looking at the chart, my bearish stance still holds. Now, I may start putting on some bull call spread. Bull put spreads. This is a good example. So back here on 8/16, this would have been an ideal time just to put, to put on a bunch of bear call spreads. Just load up as many as you can find. And then down here would have been a good time to consider putting on bull put spreads, right? So just kind of giving you a visual of the ideal time to enter and exit your trades. So just zoom in. So you want your MACD to be way overbought, stochastic crossing to the downside. SPY was touching the top LRC, and then it came down, broke the blue LRC, touched it, used it as resistance, reverted to the mean, and then failed through the blue LRC, and then right here started finding some legs, and then failed, and then wasn't until October 13 last year that we had a big bullish candle. That would have been a really good time to put in a bull put spread, probably below this candle, around like 345. It's probably the area I would have looked at if placing a credit spread on SPY on this day. So yeah, let's switch over to our watch list. I've went ahead and saved it for today, and let's just start scanning through the symbols. So what I'm doing is I'm looking at this section, the rightmost section of the chart, to see what the price is doing in conjunction with the MACD and stochastic. So I'll start doing a better job of zooming in when I find a potential trade. BDIO, pretty strong uptrend, hasn't shown much weakness. So yeah, no, I'll pass on that one. So the overall trend is down. If this was an uptrend and it was looking like this, I would consider putting on a bull put spread. Like, see how it's an upward trend, but if the price was around 15, then I would probably put on a bull put spread around 1250 or 10 for the short put. That makes sense. Okay, so we're in this one, and it's been going against us. Our stop limit's right here, so looks like it's most likely going to double top and then reverse back to the mean would be my guess. So we should be okay on this trade, but we'll keep an eye on it just to be safe. So once again, I manage my trades at 21 days to expiration, so we still have 8 days to let the trades do their thing. So hopefully 1, 2, 3, 4, 5, 6. So yeah, I think there's a fairly good chance our limit will be reached by day 21 DTE. days till expiration. Okay, so I think we traded AGL. Right here would have been an ideal entry with your MACD way overbought, stochastic crossed heading lower, and then putting it around like a 31, 32 for your short strike. And then back here, where it double topped, would have been another good entry, which I'm fairly confident we traded this one. There's just so many I'm in. They're kind of blurring together. I don't want to spend your time satisfying my curiosity. So, okay. We could do a bull put spread on this, but at the same time, it hasn't been shy approaching this bottom LRC. So let's take a look. And we have a decision to make here. Do we want to do the 29 days till expiration, or do we still, for new trades that we're putting on, do we want to go out till June with 57 days? I don't like trading weeklies, just a personal preference. You're welcome to look at it, but so let's see. So what's we'll just take a look what a bull put on the June 2nds will look like. So selling the 70, buying the 65, 40-cent credit, not quite 10%, but the delta is really low. What if we do the 17 delta? So sell the 76 and buy the 74. No. Well, yeah, we'd get 20% on that. Okay. So when we experiment, so 35 divided by 165, 21%, selling the 17 delta. So let's scroll down, looking at the 17 delta here for June 16. So we'll do sell 75, buy the 70. So before we got a 21%, do 85 or 15. So it's actually 0.5% worse, but you also get quite a bit more time, right? So is the extra time you're getting worth the difference in your ROC calculation? I would say yes. It wasn't that big of a difference. So risk 830 to make 170. The 75 will be our short leg. Down here. I don't like the stochastic being overbought, so I'm going to pass on that trade. Just I feel we're still in a bear market. So unless it's like a perfect setup, I'm going to pass on any bullish trades. So, all right. So we're in this one. This is looking prime to head down. MACD looks great. Stochastic looks great. If I wasn't in this already, I would definitely be putting on a trade with this setup. It looks great. Bitto, I think we traded this one in the last couple weeks. 20. So let's see. To do the weeklies. It was the 20 strike. Right? Yeah. To sell the 20, buy the 25. Yeah, better than 20%. I'm sorry, 10%. So let's see. 26 divided by 180, 14%. Just curious what the May looks like. So we're comparing apples to apples. The 20 was a 22 delta. Looking for the 22 delta, which is the 19, 24, 1 of 5 wide strike, not even 10%. But it is considerably less time. What if we did 20, 25? No, okay. I'm going to pass on that. Okay, APLS. Goes from May to July. July's too far out, so we'll just entertain the May 19s. What is an 85 or a 90 going for? Okay. So we split the difference. Try a 95 and 100. Not quite 10%. But the 90 and the 95. Yeah, that's better. So 115 divided 385, 30% ROC rounding. So let's see, where's the 90 strike? Up here. I like the MACD, like the stochastic. I don't like the upward trend, but I do like the cushion, and getting that kind of credit works. So we'll do 2 contracts. Send that off. That was a quick fill. Thank you. Moving on. I think it still has a little bit. This one we'll add to the almost ready watch list. Okay, so this is interesting. Upward trend. The MACD and stochastic is telling me the price is most likely headed lower. So we may revisit the 67 price level, maybe even the 63 to 65. If we were in a bullish market, if the price double bottoms around between 65 and 67, I would strongly entertain the idea of putting on a bull put spread. AMD, no. If it were back here, like on March 23rd, 24th, I would have put on a trade for like the 105 or 110 bear call spread. But right now, it will most likely double top, it looks like. Just looking at the price, the candlesticks, the MACD, and the stochastic. They have earnings that came out. So somewhat interesting. Once again, I'm leaning towards bearish trade entries because of where SPY is, and that's very heavily weighted on my trade entry or trading rules, rather. Interesting. So I like the MACD and stochastic. I would rather see the MACD up like it was back on February 3rd, thereabouts. I don't like how it's close to the mean. So if it were up here around like 30, between 32, 35, I might consider it, but too risky at this point. We're already in Amazon Builder. Okay, so the only thing I don't like is the upward trend. I do like the bearish engulfing. I like the MACD and the stochastic. Let's see what the 100, 102 is going for. I don't like a 40 delta. That's just too high. We look at the 17 delta. Okay, so yeah, we can get 10%. Where's the 110? The 110 way up here. I think that will be a little excessive and will leave some potential gains on the table. So splitting the difference, let's try the 105, 110. even though it's a 27 delta. It, technically speaking, from a technical analysis perspective, it looks much lower than a 27 delta, at least in my mind. So, yeah, over 20%. So 95 divided by 405, 23.45%. Let's do 2 contracts. There we go. I like this one. Hopefully, starts losing some strength, but feel pretty safe having, $10 in price cushion. If it's trading at the mean, it's a definite no, unless you're thinking about doing an iron condor, which is simply a bear call and a bull put spread placed at the same time. Some people like to leg into it, but if it's at the mean, I would probably just put both legs of the iron condor on at the same time. CRWD, we're already in this one. So that's another nice thing, is when you have an open buy to close limit order for your credit spread, you can see right there on the chart that you're already in the trade. So then you can quickly move on to the next symbol and not waste your time. AutoNation. Back here would have been a good entry, or even here, but no, I'm going to pass on that one. AEM, got a double, well, no, I tried double topping and it broke above it, kind of faked out, and now it's heading lower. What's like a 60 going for? Oh, we already have the May 19 on at the okay. I'm not sure why it's not showing the open order, but whatever. It's a futures contract, it looks like. Yeah, no, I'm not going to mess with futures. So we're under 50 delta. I wanted to, and that's usually the point where I stop looking for trade entries. Wanted to take a minute or two and tell you about my 0DTE that I'm toying with in this account. So I have, there we go. I've been placing iron condors on SPX. I placed this one a couple days with 2 DTE, and at the time it was at like 17 or 18 delta. Now it's a 1 delta on both my put and my call wings. So this trade's going great and will expire worthless, and I will receive the full credit at expiration. It's way out of the money, which is what you want. You want the price to stay So in terms of the call side, you want the price to stay under your short strike, and on the put side, you want it to stay above your short put. So like my short call is up here and my short put is down here. So obviously the short call was at greater risk, but because of how range bound SPX has been, wasn't too concerned. Now, because it's a shorter duration trade, usually 0, 1, or 2 days in the trade, I change my time frame. So instead of looking at the daily, I would either look at the 5-day 5-minute or 10-day 5-minute to determine where I put my short call, my short put legs. Right? So, and it's also a good idea if you want to get into both legs, wait until the price is at the mean. You'll get a better credit on both your short call and your short put. Or if you want to leg into it, wait for it to touch the LRC and then sell your call, then wait for it to drop and either hit the mean or hit the lower LRC and then sell your short put. But because of how fast the trade is, you'd be stuck at your desk or your computer for several hours. And for me, I would rather just check on it, and if I see it trading at the mean, just sell my short call leg and my short put leg, and hopefully it expires out of the money. If you look, SPX hasn't really closed here. In the last 5 days, it hasn't closed at either LRC. It's usually in between the blue LRC or closer to the mean. So look at the 10-day 5-minute. Most of the time, it's staying in this blue or turquoise LRC. So if you're selling your calls and selling your puts down here, you should be relatively safe in the trade. And it generally works out to be about a 10 to 15 delta with an 85 probability OTM. At least for these 3 trades I've done. So kind of interesting. I like the idea of a short duration trade. You're trading safety in terms of time, and you don't have hardly any theta or time decay because of how short the time you have left is. But that means it's mostly intrinsic value, and it will, like, here, we'll just look. See, like, my short call has a theta of 5. Now, closer in the money is a much higher theta because they're more expensive of an option. So the theta has to be higher to erode the value of the option. So, and then the short put theta is a 10. And let's look at the 21, April 21. Lots of strikes on this one. Oh, come on. I guess I didn't do non-condor on the April 21. I just did a bear call. So this one has a theta of $3. So some of the nice things of going, 1 or 2 days out, like I just made $3 per contract just in terms of theta. So let's see. SPX. So looking at the April 20th, I collected about $90. Now it's worth 2.5 cents in the course of a day and a half. That's nice. I'm kind of liking this. Then on the put, I collected $4.22. It's trading at 10 cents. April 21, collected $13.50. Now it's trading at 5.25. And then on the 41.90 call, collected 80 cents and it's trading at 75. So I'm really enjoying this. 0 DTE or 1 or 2 DTE strategy. Definitely much faster rate of return, and your capital's only being tied up for a short period of time. I'm getting a nice credit and return for such a short-term investment. So the biggest risk I see is some kind of news that comes out and you have a pop in volatility and a parabolic move either way. And it will if it trades through your short strike, then you'll hit your max loss in a very short period of time. And because it's almost expired, there's little chance of rolling it out to another expiration. So it's for that reason, I generally, my thought is to place my short leg at this LRC, the purplish one. So far, it's been working out great. So definitely keep watching my videos to see how well my, let's say, week of option expiration trades are going. So lately, I've only been doing 1 or 2 DTE. I don't want to go 4 days out. So 0, 1, maybe 2 days to expiration works. I guess I could, no. I'm pretty confident in knowing where the price will go within the next 0, 1, or 2 days. But beyond that, I'm less confident. So, like looking at the chart, SPX will probably close between 41.25 and 41.60, most likely. And with my iron contour. 4100, yeah, we're really safe. 4190, yeah. The Provo TEM is 99.59% probability expiring out of the money. And the put side is 98.41. So definitely good on today's expiration iron condor for SPX. Feeling good. So that's it for today. Thanks for watching. Make sure you like, share, and subscribe. And happy trading. Thanks.